Qantas has recorded an underlying loss of nearly $2 billion, marking the third year in a row the airline has lost substantial amounts of money. The airline posted an underlying loss of $1.86 billion and a statutory loss of $1.19 billion. In an update to the market this morning, the airline cited the impact of Delta and Omicron as well as the costs of restarting flights after the lockdowns finally ended. Read more. Ethiopian Airlines pilot suspended after falling asleep, missing landing. CEO Alan Joyce said the past 3 years have resulted in total revenue losses of $25 billion. These figures are staggering, and getting through to the other side has obviously been tough, he said. We had to ramp down almost all flying once Delta hit and stay that way for several months before ramping back up through multiple Omicron waves as we all learned to live with COVID in the community. Joyce also cited sick leave and labor shortages posing a serious problem as travel demand picked back up. He said there was a big improvement in baggage handling and cancellations in August, and said he expected a return to pre-COVID standards next month. Read more. Millions of Qantas customers to be given $50 discount. Qantas share prices surged on the news, jumping up more than 8% on opening on the ASX this morning. Domestic flying was at 63% of pre-COVID levels for the past financial year, and at 103% by June 30th. Fuel costs were also a major factor on the Qantas balance sheets, up 60% on 2019 prices. The airline flagged it would be spending $50 million this year on pay rises for staff. Today, Qantas opened a new cabin crew training centre in the Sydney suburb of Mascot, and a flight training centre will open by the end of 2023. We're even more confident in the future than we were 6 months ago, Joyce said. There is a lot of work happening to bring us back to our best, including hiring more people, rolling out new technology and reducing domestic flying so we have more sick leave cover. The board has approved an on-market share buyback of up to $400 million, the first return to shareholders since 2019. Read more. 9 records $315 million profit, record dividend.